Hello, Risha. Welcome
Hello
and
there.
thank you for joining me on the call this morning. May I ask you to start with a short introduction of your company?
Of course. Um, my company is HR Maritime. In fact, I started working in commodity trading in about 2000. I was working within commodity trading companies, handling a lot of the operational issues, handling the letters of credit, handling insurance, and so everything that was very much getting the contracts executed. I worked for two different trading companies in the world of rice trading for about 7 years, mainly from Asia to West Africa, and we were handling about 1 million tons of rice per year. So it's quite a lot of traveling to West Africa, it's quite a lot of handling operational issues, and seeing how the trade was progressing. In about 2008, I created HR Maritime, and the idea was very much to use my technical knowledge, what I know how to do, and help other trading companies. And there were two main focuses there. One being to help trading companies that exist at the moment that are in the world of trading, and wherever they have small problems, they have problems on various operational matters, on payment matters, on shipment matters with ship owners, with various calculations. But also my main real focus was the fact that at the moment you have three fundamental actors within the world of commodity trading. You have the exporter, you have the trading company, and you have the importer. And we're seeing some massive shifts in the world of trading that we've been seeing over the last 10, 15 years, depending on which commodities. They're happening faster or slower in different areas. But basically, the first one is that trading companies are getting bigger. The trading companies themselves are getting bigger and bigger. We see at the moment the talk about Glencore buying up Bunge, and so that will just be more consolidation. We also see the smaller trading companies, the niche ones, being quite active, but medium-sized trading companies are really disappearing at the moment because of access to financing, because of problems with payments, problems with letters of credit that they're having with the banks at the moment. But we're also seeing the trading companies becoming much more vertically integrated, and so they want to have much more control of the value chain. But the third area is probably what interests me most is that the traditional world of trading was very much exporter, trading company, and then importer, whereas now the exporters are moving into the world of trading and they are selling directly to the importer, and the importer is moving directly into the trading world and buying directly off the exporter. And so this means that it's becoming a lot more mixed up. And so this is really a focus for me. It's trying to see what I can do to help the exporters or help the importers be able to go directly to their source, directly to their destination, and be able to do their trade directly and actually handle the trade themselves. And so it's a world that's changing very, very, very quickly at the moment. And so certainly within HR Maritime, we're trying to follow these changes. We're trying to help our clients with these changes, but also just help them with their standard business on a day-to-day basis.
Oh, right. Yeah, that sounds great, encouraging. That's cool. Yeah. You are a member of ModulTrade Advisory Board for some time now. How did you find the solution to democratize the trade for the small and medium enterprises which ModulTrade is trying to represent? How do you see that?
Well, I think it's an excellent idea. I mean, I think it makes a lot of sense, and there's a large scope for the future. I think that if we were looking at a technological solution like this about 10 years ago, it just wouldn't have come off the ground because we weren't there in terms of technology. Whereas now we are. But it's also the fact that there's less demand these days for a middleman. There's more appetite for people to go directly to a supplier or to a buyer, just as I was saying. And so a system like ModulTrade is ideally suited for that. It facilitates this access, it facilitates this direct contact, but it solves the major issue, and that's the issue of trust. And so it's actually being able to trust someone enough to make payment for the goods, knowing that they will ship the goods. And it's the age old problem, and that's why we have letters of credit. Because the old problem is, okay, I'll pay you first and then you ship the goods, or you ship the goods and then I'll pay you. Obviously, I want you to ship the goods first before I pay you, and you want me to pay you before you ship the goods because we have this breakdown of trust. We don't have this level of trust that two multinational companies that do business on a day-to-day basis might have between them. And so it's being able to use a system which can provide that level of trust, which can provide a custodian in the middle and ensure that the payment will be made if the delivery is made, and ensure that the delivery will only be made if the confidence that the payment will be made is there. So I think it's very much an essential part of what we need in trading at the moment.
Oh, great. It sounds great. Okay. And if I may do the recap, Do you see any impact that it may give to the industry? I mean, whether model trade can create some impact on the industry itself, whether it may create some new challenging channels and the business flow?
Well, I think the short answer is yes. The long answer is trading is absolutely vast. I mean, we talk about trading, and then you can talk to 100 different people, and they all have a completely different idea of what trading is. And so you could be talking about pure financial trading, someone sitting behind a screen just looking at figures. You could be looking at physical commodity trading, and so trading cargoes of 150,000 tons of iron ore or 50,000 tons of rice. You could be talking also about trading in manufactured goods. And so it's important to try and separate the different areas. And so, I mean, obviously the immediate impact, slightly because it's slightly less complex, is the manufactured goods. But for me, my focus has always been the physical commodity trading. And so transporting homogeneous goods of shipments of anything from 1,000 up to 100,000 tons, well, up to 400,000 tons on the new Valleymax vessels. And it's something that I look at a shipment of 1,000 tons, and well, that's a tiny shipment. That's a very, very, very small shipment. Whereas if you stop and think about it, 1,000 tons is a lot of anything.
Right.
And so it really depends on your point of view. It depends on your scale. But when I'm looking at it from the commodity trading point of view, from the raw commodities, there'll be a fantastic interest and a huge application of it. We see a lot of projects at the moment where people are trying to bring things online. They're trying to digitize the way we do trade. The way that we do commodity trading is at the moment very, very antiquated. It's letters of credit haven't changed fundamentally in 100 years. Charter parties haven't changed fundamentally in 200 years. And so just the way that we go about the trade, the way that we actually contact our counterparties, the way that we ensure that goods have been loaded, the fact that we have bills of lading. Bills of lading have been in the same form for several hundred years. And so there's an awful lot of scope for advancing. It's an industry which has a lot of inertia, which means that in order to get things moving, it's very difficult to get them moving. But when people are convinced that it's a good solution, things move very, very quickly. And I think that's where we are at the moment in commodity trading. We're in a position where people say, okay, we need to change. There's a lot of improvements to be made, but it's really looking at what makes sense. And so something like module trade for me is it will also provide a lot more access to smaller players. It will create problems for the traditional trading companies today, because those trading companies, they operate because they have the scale, because they have the financing, because they have the means to actually charter and buy 40,000 tons of rice to deliver it to destination. Whereas if somebody can go on a system such as module trade and just look and say, right, well, I want to buy 1,000 tons of rice because that's what the market I have for the next week of demand for my consumers is, then they can go on and they can buy the cargo in this way, and it creates a lot more means for direct access between the exporter and the importer. And so I think that, I mean, on one side, it will provide a lot of scope to replace letters of credit. But not only that, it will also provide a means for the exporter and the importer to talk directly to each other and essentially cut out the middleman. And that's what we're doing in so many areas of business at the moment. When we look at things like Uber, we look at Airbnb, we look at all these different things. It's cutting out the middleman, and that's exactly what the solution will provide.
Yeah, that's great. Sounds encouraging. Thank you very much. Thank you for this interview, and thank you for being with me this morning. And good luck. All the
Thank you
best.
very much.
Thank you.
Pleasure to speak to you.
Yeah, thank you. Bye-bye.